Welcome to today's show. I am your host, Eric Darnley Small. Thank you so much for joining me today. And of course, if you like today's video or anything you see here, please consider liking and subscribing, maybe even clicking that bell so that you'll be notified for new content. If this is your first time here, you may not know it, but I'm going to read from a bunch of different articles, and you will find links to those articles on my Mastodon at mastodon.vtip.me/at what you missed. And you'll be able to find links so that you can read the full document, so that I do my homework and I show my material and I show where I'm sourcing my content, so you don't have to ever wonder where the hell is he coming up with this stuff. So on today's show, it's a moment of Krug, something I haven't done in quite a while, and the reason why I'm doing it is because the economy is once again in the news. Folks who have been here before will know that I spend quite a bit of time talking about the economy, quite a bit of time, well, not overly discussing it, but quite a few times. My last video was roughly about the economy and what I think are issues that we have to look out for. And that's going to be today's show. Some very interesting things are happening on the stock exchange, and I have a feeling it's significant towards not only where I think the economy is going, but also significant in terms of the overall race for the presidency. So yesterday, CNBC had a report. This is after the bell closed, and it was entitled $1 trillion Wipeout. Paul Krugman had an article yesterday. Indicators are we're heading towards a recession. Why this could trigger a win for Trump. This is going to be from Allan Lichtman's 13 Keys. He put up a video yesterday regarding the significance of the economy and, of course, my final thoughts. So today, an episode jam-packed on the economy, the significance of the economy, significance of these reports that have come out, and the like. I don't want people to miss this. I know today Kamala Harris has announced Tim Walz as her VP pick. People are going to be talking about that for the next few days, and then of course the hype is going to be about the convention. But this is an important story. The economy, not only for our own pockets and the overall good of the country, but also it affects the likelihood of a Kamala Harris win. So let me go into this, and we get back to the old quote. It's the economy, stupid. This is James Carville to reportedly to Bill Clinton. Bill Clinton had this, I think, on his wall in his office during his election. And we have to remember it as well. The economy is what makes the difference going forward. And we can't ignore this story. This is out of CNBC, $1 trillion wipeout. Market rout punishes mega cap tech. And the sub title is the 7 most valuable U.S. tech companies lost a combined $1 trillion in market value at the start of trading on Monday. And this is by Rohan Goswami and Ari Levy. Again, this was yesterday. And it says, markets fell broadly on Monday as concerns about a recession stemming from disappointing economic data last week pushed Japan's Nikkei 225 down 12% on Monday, its worst day since 1987 Black Monday crash on Wall Street. It's a sharp change from a few months ago when investors cheered as Meta CEO and Google CEO both said their companies were spending heavily to build out their artificial intelligence infrastructure. Some analysts have been sounding the alarm of late regarding a potential overinvestment in AI. A widely read Goldman Sachs note from June warned that the biggest spending companies had little to show for their AI expenditures. Elliott Management, one of the largest hedge funds in the world, reportedly told clients that NVIDIA was in a bubble and the AI frenzy was, quote, overhyped. NVIDIA reports earnings later this month. The company has generated revenue growth in excess of 200% for the past 3 quarters. And I put an asterisk here, and it's a note that as of Monday night, Tuesday in the East, Japan's stock rebounded sharply on Tuesday after the Nikkei 225 and the Topix dropped over 12% in the previous session. Other Asia Pacific markets also opened higher. Japan's Nikkei 225, which saw its largest loss in the previous session since the 1987 Black Monday crash, and the broad-based Topix gained over 10%. So this is good news as of today. I have not, as of this morning, looked too much into what CNBC is saying, but it appears as if the economy, the market is coming back. I'm going to go very quickly to CNBC actually and see if I can see what their headline is right at the top. So this is CNBC right now. The Dow rallies 400 points. S&P 500 up 1% as Wall Street rebounds from sell-off. So I think that this is good news in terms of anything that would have metastasized and gotten bigger. But it is something to continue to keep our eye on. I think investors are pretty much certain that there is something going on with the economy, and they may be a little bit spooked. I'm not sure what to make of it totally, but we're going to go to Paul Krugman because he is on top of this whole thing, and his report is a little bit sobering in my view. Because he is a guy who has been talking about how good the economy is. And he has a very interesting take on this because he says the economy is looking pre-recession-y. I'm pretty certain that that is his own. He just made up that word. But will the Fed snatch defeat from the jaws of victory? So he goes on, and this is from yesterday. His op-ed is from yesterday, August 5th. And he goes on to say the United States probably hasn't entered a recession yet, but the economy is definitely looking pre-recessionary, and policymakers, which right now basically means the Federal Reserve, need to move quickly to head off the risks of serious economic deterioration. Why do I say that the economy looks pre-recessionary? The most important factor is the unemployment rate, which has been gradually trending up over the past few months. Friday's unemployment triggered the SOM rule, which says that a sufficiently high rise in the unemployment rate is a strong indication that a recession has started. Many economists, including Claudia Sahm, who devised the rule, believe that for a variety of technical reasons, things may not be as dire as they look. But even so, the situation is worrisome. Am I 100% sure that we have a recession unless the Fed moves quickly to cut rates? Of course not. Nothing is certain in economics or in life more generally. But policymakers who wait for perfect certainty before acting will always move too late. So how did we get to this point? The Fed increased interest rates a lot in response to the 2021-2022 surge in inflation. I didn't oppose that move. I didn't think that the Fed had a choice, given the perceived risks that inflation might become entrenched in the economy the way it did in the 1970s. By the second half of 2023, however, it was clear that fears of a return to the 70s show were misplaced. Inflation was coming down steadily without the years of high unemployment some economists wrongly claimed would be necessary. But the Fed didn't respond to falling inflation by cutting interest rates, seemingly unwilling to act until they were sure inflation was back to target. Beyond that, however, it's hard to escape the sense that the Fed had to some extent been paralyzed by inflation PTSD. Having faced harsh criticism for moving too slowly to raise rates when inflation began rising a few years ago, it may have compensated by failing to cut rates when inflation began to fall. For a long time, our economy held up remarkably well despite very high interest rates. Now the cracks are starting to show. What's especially galling about the current situation is that we may be about to snatch defeat from the jaws of victory. As of right now, America has basically achieved what many economists had considered impossible, a soft landing, in which we managed to get inflation way down without high unemployment. But we are increasingly at risk of experiencing a lot of unnecessary pain simply because the pilot waited too long to pull up the plane's nose. One more thing. If the Fed cuts rates in September, it will probably face a firestorm of criticism from Republicans accusing it of trying to help Kamala Harris defeat Donald Trump in the presidential election. And yes, a rate cut would probably help Democrats largely because it would help drive home how successful America has been in bringing inflation under control. But politics shouldn't, and I hope won't, affect the Fed's decision. So there are ramifications of the economy going into recession or not going into recession. The fact that, of all people, Paul Krugman, who has been one of those who have been championing the idea that the economy is doing great and America is doing great because of this great economy, is now saying it looks very much like recession. And he even says probably twice that we're not in a recession, which means he is thinking that there could be an argument that we are in a recession. Now, how does that affect the election? On the surface, I think all of the hype, of course, is on Kamala Harris, and polling looks good, as well as the bounce that she's going to get from having Tim Walz on the ticket. Until of course, they're going to be digging into his past, which is going to take up election cycles. Then, of course, the DNC is going to have its convention, where I'm sure they're going to have some of these Republicans for Harris speak. So there's going to be a whole lot of stuff in the air up until the actual voting. We're going to have a lot of lift, and people are not going to be focused on it. But we have to remember that the economy does matter overall in this whole thing. And who better to mention it than the 13 Keys? I've been following Allan Lichtman and the 13 Keys for a long time. Since the previous podcast I did, I talked about his success. He says in all of the last elections, beginning with Ronald Reagan going forward, his keys have been 100% successful. And he put up a video yesterday. You can find it on, just do a search in YouTube and find his channel. And he has put up his response to the economy, because he is one who has said that the economy is one of the more important keys that could swing an election. And it says, will uncertain economy sink Dems in November? And one of the things I want to mention also is that so far, according to Lichtman and his keys, things have been looking, and he has been interpreting things as being to the benefit of Democrats with respect to the economy. So what does Lichtman have to say now about this new development with a possible recession, the Psalm rule, and this drop in the market and everything? So let's go. I'm going to play this video from his channel, and I urge you, as always, everyone, to take a look at it yourself. Lichtman, Allan Lichtman is
Hello, friends. There have been some important developments in the keys to the White House. My prediction system that's been right since 1984. Remember, the keys are based upon the finding that American presidential elections are essentially votes up or down on the strength and performance of the White House party. And that's what the keys gauge. And if 6 or more of the keys go against the White House party, they are predicted losers. And right now, the White House party, represented by Kamala Harris, has definitively lost 3 keys. The mandate key, based on losses in U.S. House elections, the incumbency key, because while Harris is the vice president, she's not the sitting president, so it's an open seat election, and the incumbent charisma key, because she's not a once-in-a-generation, inspirational, transformational president like Franklin Roosevelt. That means 3 more keys would have to fall to predict the Democrats' defeat. And there have been some recent developments in the assessment of the keys, both positive and negative. On the other hand, we've had a very unexpected development with the economy. Remember, I have 2 economic keys. The short-term economic key, which says that there is no recession in the election year. It's phrased as no recession because an answer of true always favors the reelection of the White House party. An answer of false favors their defeat. But there have been recent developments that at least might call into question the short-term economic key, which I had previously thought was solidly for the White House party, that there was essentially close to zero chance that the economy would suddenly fall into recession in this election year. But there have been a couple of developments that might at least raise the question about the short-term economic key. First of all, we had a very weak jobs report. Weak in the sense that not that jobs weren't created, about 114,000 jobs are created. Not a terrible thing, but in the phony world of economics, everything is measured against expectations. And the problem was that the job numbers had fallen well below economists' expectations. And then on top of that, we had worldwide fears of economic weakness in the United States, which tanked stock markets abroad, and at least for a couple of 3 days, tanked the stock markets in the United States, and some recession indicators were flashing red. Let me make 2 points crystal clear. One, we are not in a recession. Indicators and warnings of a recession are not a recession. So at this point, the short-term economy key has not turned against the White House party. And there is absolutely no assurance that despite some warning signals in the economy, that the economy is going to fall into recession anytime soon. The Goldman Sachs forecasters, who have a lot at stake in this, they rate the chances of a recession this year at 25%, which if you believe that, it means the the short-term economic key, still leans heavily in favor of the White House party to have a recession occur quickly and turn that key against the White House party. But it is something new to consider. As the great comedian, the late Rosanna Dano once said, there's always something. Stay tuned.
Okay, so that's Alan Lichtman and his 13 keys. Important stuff and important to consider. So, my final thoughts are as follows. um, the economy has to stay strong. We just heard that from Lichtman. Basically, it is a part of his keys. And for Kamala Harris to win, the economy must stay out of recession territory. But that appears increasingly hard thing to do. Lichtman has said that we're not in a recession. He doesn't see it happening. I think that Paul Krugman might be a little bit more on the side of a higher possibility, particularly if the Fed doesn't act. And that goes to my next other thought that, is the Fed chair playing politics? As Krugman notes, no matter what happens, the other side will think the Fed is playing politics, but that can't stop them from doing what is best for the economy. We have to make sure and we have to hope that Fed Chair Powell do what's best for the economy and that it will come to our benefit, our meaning Democrats' benefit, that he's able to pull back on this rate hikes and begin to do something significant that would cool the economy and hopefully keep us out of recession or at least look good going forward. Not just because of the presidency, but people need relief. As I've said before, I suspect we are ever closer to something spectacularly bad happening to the economy if the government doesn't act. As indicated on Monday, Asia's economy is looking ever so shaky. I indicated on my last video that no matter who wins, we're screwed. I still believe that even if we remain out of a recession leading up to the election, that is nothing to say that by the end of the year or by early 2025, we don't have something economically explosive happening. The Middle East is looking worse and worse every day. It looks like Iran, Lebanon, Israel, that whole powder keg is going to explode even higher. Russia is still appearing to me to be, dug in. We know that this war in Iran, between Ukraine and Russia, has gone on for almost 2 years. We're going into, and the Ukrainian people are exhausted. They're tired, and I don't know what that means. But things could shift for the worst there. That's actually a different key, but that could affect the economy in Europe. And we already know, as I've discussed before, real estate is a big issue in Asia, and no one's talking about it. But in Europe, there was a fairly big scandal as well with real estate, and of course, people here in the U.S., people going and not going to work, commercial real estate. On another video, I'm going to talk more about Florida, California, how climate change is affecting those areas. And finally, the AI correction. This is very interesting. I'm fascinated by the report out of Goldman that AI is overhyped. I have been agnostic about AI. I think, like a lot of things that are coming out of Silicon Valley, the hype tends to not match the real world potential. The move to all electric vehicles is just one example. So, that is a very fascinating thing. I think the movement away from all electric, as these reports are coming in, that people are willing to go hybrid before they're willing to go all election and electric. And I think hybrid makes sense. People need to get used to charging their car at home. People need that safety, that used to that feeling of safety that they are not going to run out of battery because they forgot to charge their car, or they weren't able to get to a charging port because it wasn't available or was empty or whatever. So this idea of AI being overhyped, I think, is absolutely fascinating and something I really want to keep an eye on going forward. But that's it for today. Those are my final thoughts. Those are my biggest stories that you may have missed. Thank you for joining me again on today's show, and you will see me on the next one. Take care. Have a great week, everyone. Fantastic viewers, Eric Darnley Small here, and I hope you're loving today's episode of What You Missed. You've reached the end of today's show, but don't worry, there's more show coming up. If you're watching this on YouTube, please click the bell so that you'll be notified when more content is available. You can also help the channel by clicking the like and subscribe buttons. It helps the YouTube algorithm find new viewers so that I can keep bringing you all this incredible content you enjoy. But wait, there are more ways to support the show. You can make a contribution through the show's PayPal, which goes a long way in helping produce even better content for you. And consider becoming a part of our growing community by joining our Mastodon site at mastodon.vtip.me/@whatyoumissed for more engaging discussions and exclusive updates. And here's something you won't want to miss. Mark your calendars for our live show streaming on YouTube and stream.vtip.me Monday mornings, 10:30 a.m. Eastern Standard Time. Your support means the world to me, and together we're making What You Missed the best it can be. Thanks for being a part of my journey.